Picture the stock market as a claymation movie, always moving, never still. Every day, prices shift, trends emerge, and opportunities appear and disappear in the blink of an eye. It's a world full of energy, excitement, and constant change, where fortunes can be made or lost with a single move. The market has its own rhythm, and swing trading is learning to move with it. It's about tuning in to the market's natural flow, understanding when to step in and when to step back, and finding your own groove within the chaos. Unlike day trading, which demands your attention every minute, or long-term investing, where you might wait years for results, swing trading is the sweet spot in between. It's a flexible approach that lets you participate in the market's action without being glued to your screen all day. Think of it like surfing. You wait patiently for a good wave, ride it for as long as it lasts, and then paddle out to catch the next one. Each trade is a new adventure, and every wave brings a fresh opportunity. As swing traders, we aim to catch those upward or downward moves in a stock that play out over a few days or weeks. We're not chasing every tick, but instead we look for meaningful swings, take our profits, and move on to the next setup. This style is perfect for people who can't watch the market all day. If you have a job, school, or other commitments, swing trading fits into your life, not the other way around. You can research in the evenings, set up your trades, and let them play out while you focus on your daily routine. It's about making the market work for you, not the other way around. You don't need a finance degree or years of experience, just a willingness to learn, a bit of patience, and the right mindset. Anyone can start swing trading, no matter their background. We'll break down swing trading into simple, easy steps. Each principle will build on the last, guiding you from the basics to more advanced strategies, so you can grow your skills with confidence. By the end, you'll see the market not as a scary, unpredictable monster, but as a series of opportunities waiting to be discovered. You'll learn to spot patterns, understand trends, and act with purpose. You'll discover how to spot the best moves, manage your risk wisely, and build the confidence to make decisions on your own. These are skills that will serve you for a lifetime, both in trading and beyond. So get comfortable, grab your favorite drink, settle in, and get ready to start your journey into swing trading. This is your time to learn, grow, and take control of your financial future. The first step is always the most important, and you're taking it right now. Every journey begins with a single move forward, and you're already ahead of the curve. Let's mold your understanding, one swing at a time. Together we'll turn curiosity into knowledge and knowledge into action. The goal of swing trading is simple: capture a single move or swing in a stock's price. Stocks move in zigzags, not straight lines. Our job is to spot when a new swing is starting and ride it for a few days or weeks. Think of a pendulum. We want to catch one full arc, not the exact bottom or top. Swing traders focus on short-term price momentum, not the company's long-term future. We rent stocks, aiming to profit from their volatility over a short period. The process is repeatable. Find moving stocks, enter at a good price, ride the momentum, and exit with a gain. We're not waiting for a home run, just consistent, achievable profits. This approach makes swing trading accessible and repeatable. Focus on the next swing, not the whole story. That's the heart of swing trading. Let's learn how to spot those swings. Not every stock is right for swing trading. First, look for liquidity. Stocks that trade millions of shares daily so you can get in and out easily. Next, you want healthy volatility. Stocks that move enough to create profit opportunities but not wild penny stocks. The best candidates have a clear trend, either up or down. Trading with the trend is like swimming with the current. It increases your odds of success. Avoid choppy, sideways stocks, they're confusing and risky. Well-known stocks in major indexes often have cleaner, more predictable patterns. Liquidity, volatility, and a clear trend. These are your swing trading stars. Focus on these, and you'll have the right clay to mold your trades. Let's see how to spot them on a chart. Ready to find your next star? Think of the stock chart as your map for swing trading. It guides your decisions, showing you where you are and where you might go next. Among all chart types, candlestick charts are especially powerful for traders, offering a detailed look at price action over time. Each candlestick tells a story for a specific period, showing the open, close, high, and low. Green candles mean the price went up, while red candles mean it went down. By looking at the size and shape of these candles, you can spot patterns and clues about what buyers and sellers are doing. Learning to read these candles is like learning the market's language. Patterns like dojis, hammers, and engulfing candles can signal reversals or continuations, giving you an edge. Next, draw support and resistance lines. Support acts like a floor where price tends to bounce, while resistance is a ceiling where price often stalls or reverses. These levels help you spot high-probability entry and exit points. A classic strategy is to buy near support and sell near resistance, taking advantage of these natural price barriers. To boost your confidence, add technical indicators. These tools help confirm what you see on the chart and filter out false signals. The 50-day moving average is a favorite among traders. It smooths out price action, reveals the overall trend, and can act as dynamic support or resistance as price moves. If the price is above the 50-day moving average, the trend is up, buyers are in control. If it's below, the trend is down, and sellers have the upper hand. Another key tool is the Relative Strength Index, or RSI. It measures momentum and helps you spot when a stock is overbought above 70 or oversold below 30. These zones can signal when a reversal is likely. Don't rely on just one tool. Combine candlestick patterns, support and resistance, moving averages, and RSI to confirm your trade ideas and reduce risk. For example, if a stock is at support and the RSI is below 30, you have a strong candidate for a bounce. This confluence of signals increases your odds of success. Mastering these basics will help you read the market's map with confidence, making you a more skilled and prepared trader. Now, let's put these tools to work and start making smarter trading decisions. Let's hunt for a great swing trade setup. Start with a stock screener to filter for liquid quality stocks. Don't try to watch them all. Next, scan charts for a clear trend, up or down. Skip messy, unclear charts, focus on the obvious plays. In an uptrend, look for stocks staying above their 50-day moving average. Wait for a pullback to support a previous price level, trend line, or moving average. Patience is key. Don't chase soaring stocks. Look for a trigger, a bullish candlestick pattern, or a bounce off support. This is your signal to enter. By screening, finding the trend, waiting for a pullback, and looking for a trigger, you create a repeatable process. Consistency is your edge. Follow these steps for high-probability trades. Ready to see it in action? Risk control is your trading seatbelt. Always use a stop-loss order. Set it before you enter a trade, just below support. This protects you from big, unexpected losses. Never risk more than 1% of your account on a single trade. Calculate your position size so your maximum loss stays within this limit. Plan your profit target. Aim for at least twice your risk, a 2-1 reward to risk ratio. Place your target near the next resistance. This way, your winners are bigger than your losers. Protect your capital first. Profits will follow. Discipline and risk management is what keeps you in the game. Here's a classic swing trade. The breakout. Imagine Claymation Corp. Clay, stuck between $50 support and $55 resistance. After weeks of bouncing in this range, volume surges and Clay breaks above $55, closing at $56. That's your breakout. Buyers overpowering sellers, signaling a new uptrend. Enter the trade as the price confirms strength, say at $56.50. Place your stop loss just below the breakout, at $54.50. If the breakout fails, you exit quickly, with a small loss. Set your profit target at $60.50 for a 2-1 reward to risk ratio. Place your sell order and let the trade play out. If the stock rallies and hits your target, you exit with a solid profit. The breakout play is all about timing and discipline. Use this setup when you see strong volume and a clear resistance break. Let's look at another powerful setup. Another favorite setup is buying the pullback in a strong uptrend. Animators Inc. has been trending up, staying above its rising 50-day moving average. Instead of chasing highs, wait for a pullback to support, like the 50-day average. As Inc. drifts down to $75, watch for a bullish signal. A hammer candlestick forms at $75, showing buyers stepping in. Enter above the hammer's high, say at $76.75. Place your stop loss just below support at $74.75. Target the previous high or a 2-1 reward to risk, maybe $80.75. This strategy lets you buy strong stocks at better prices, reducing risk and boosting reward. Patience pays off. Wait for the setup, then act decisively. That's the power of the pullback buy. You've just taken your first big step into the world of swing trading. You now understand the essentials, from spotting high-probability opportunities to managing your risk with discipline and care. These are the building blocks of every successful trader's journey. Focus your attention on liquid, trending stocks. These are the stocks that move, giving you the best chance to catch meaningful swings. Use simple, reliable tools like support, resistance, and moving averages to guide your decisions. They're the foundation of technical analysis. Always protect your capital. Set stop losses before you enter a trade and use smart position sizing to ensure no single loss can knock you out of the game. Remember, survival is the first rule of trading. Profitability isn't about being right all the time. It's about making sure your winners are bigger than your losers. Consistent discipline, sticking to your plan even when it's tough, is what separates successful traders from the rest. Patterns like breakouts and pullbacks repeat over and over because human psychology never changes. Learn to recognize these setups. They're your edge in the market. Make it a habit to practice spotting these setups on charts every day. The more screen time you get, the sharper your instincts will become. There's no substitute for experience. Be patient with yourself. Every trader makes mistakes. What matters is that you learn from them. Each error is a lesson that brings you closer to mastery. Treat trading like a real business. Have a clear plan for every trade, keep a detailed journal, and review your trades regularly. This is how you build consistency and confidence. Never stop learning. The market is always evolving, and so should you. Read, study, and refine your process as you gain experience. The market is a lifelong teacher. Embrace the journey, knowing that every day brings new lessons and opportunities for growth. Stay disciplined, enjoy the challenge, and always look for ways to improve. Progress comes from persistence and a positive mindset. You now have the tools, the knowledge, and the roadmap to start your swing trading journey with confidence. It's time to start molding your own success story, one swing at a time. Every trade is a new opportunity to learn and grow. Your journey as a swing trader begins now. Step forward with confidence and let the adventure unfold.